Okay, welcome traders. Hope everyone's well. Good morning, good evening, and good afternoon. Okay, next segment in the series is going to be how to use footprint charts. It's another one that we're going to add into the playlist for the order flow series, as it can definitely help you improve everything. Okay, so what are we going to cover in this video? We're going to cover what is the footprint, why you should use it, my specific setup, and we're going to cover some charting examples that you can see in Globex in the regular trading hours, and how you can utilize all of this in your current methodology regardless of what strategy you are trading. Okay, so what is the footprint? Okay, essentially it shows you what is behind a specific candlestick or traditional charting patterns. Okay, it displays every market order that is carried out on the bid and the ask. Okay, and trades that are carried out into the bid are known as selling, and trades that are carried out into the ask are known as buying. Now, in this presentation here, I'm going to use the word offer, as I prefer to use the word offer, but it means the same as the ask. Okay, so just as some housekeeping and reference points from there. Okay, and the real point about the footprint is you get to see where true buying and selling occurs. You get to spot exhaustion and imbalances when price gets to key inflection points. Okay, so this is the reason why certain support and resistance levels hold, or price will sweep a level and revert back into value. You get to see in the second, in the now, as to what is actually happening at market order level. Okay, but one of the limitations of footprint is that it doesn't show the passive orders or orders that are waiting on the limit. You need to incorporate the DOM or the depth of market in order to factor that in. Okay, so we're going to cover that at the end, but footprint is essentially only showing market orders, and it gives you a layer deep and a deeper dive than what just a traditional candlestick or chart pattern would show you. Okay, so how do you read the footprint? Now, I know there's a lot of material on YouTube. I've watched a few of them over the years, and I think there's a couple of things that people do not um, cover properly, and they don't discuss it. Okay, because typically a lot of people just bring up a footprint chart and they don't really utilize a depth of market. So we're going to break this down into its most common denominator for everyone. Okay, so the left hand side that you're seeing here, okay, is trades that are carried out in the bid, known as selling. Okay, and at the right hand side is trades that are carried out into the offer, known as buying. Okay, you can see this here with the arrows that are showing this. Okay, now when you look at this in hindsight, you would think that at this price 507 was executed here versus 457 on the bid. Okay, sorry, onto the ask. Okay, now it doesn't interact in a horizontal way. Okay, it can at times if you watch the depth of market, but it's the most prevalent way that the market will occur is it works diagonally. So currently price is sitting here at 28. In order for this to go up to the next price, they need to lift in, and you can see that they lifted in 185 contracts into the offer. Okay, and the same way down, what you can see here, there is 352 contracts hit into the bid. Okay, but there's someone waiting on the limit. They had to clear this price in order to tick down. Okay, it doesn't work horizontally. You'll see it horizontally after the fact, but as in the right and now, it when it's happening in a diagonal manner. Okay, so just to take that into consideration because it's very important. Now, the footprint, in essence, you get to see at a specific price if any buyers and sellers were interacting. Now you can see down here, I've got this shown over the cursor, that not one person in the world at this point in time, okay, essentially sold into this price to defend, and the market then ticked up. We then hit 59 contracts into the next price. Okay, then there was a little bit of defending in there, so 29 then hit back. Okay, and then we then ticked up again, And then you can see that again, not one person in the world at this point in time tried to sell back into this price to tick back. Not one contract. Okay, so this is extremely important for you to see who's in control. We have highlighted imbalances shown that extend that we're going to cover later on in this video. Okay, so we're going to cut this here and we're going to go to my actual footprint chart setup and explain a little bit of that for you. Okay, so we'll see you in the next slide. Okay, regarding what you're looking for in the footprint chart and what you're actually seeing. Okay, so at the top here we have delta. It tells you if it's positive or negative. We have 1533 delta here and negative 1002 delta here. At the bottom we have the total volume for the specific candle. For your reference, this is a 5-minute chart, so each candle that you're seeing is a 5-minute candle. Okay, we have on the right hand side that we've discussed in the slides is the buying, and the left hand side is the selling. Okay, we also then have imbalances. Now I have these extended across the screen. So the red is extended selling imbalances and the blue is extended buying imbalances. Okay. Now at the bottom we have some calculated values where we have delta, we have the positive delta sum for that candle, the negative delta sum, we have cumulative delta, we have the ask volume minus bid volume displayed as a percentage, okay, is a difference, and then we have the total volume for that specific candle. We're going to discuss the volume differences between Globex and RTH, but they are massively different in those sessions. Okay, so we'll see you back at the slides. Now that you understand what we're actually looking at and you're seeing what I see when I look at the footprint chart, okay, now at the left hand side you've got here is a traditional candlestick chart, and this is the equivalent on the footprint. Okay, now this is Globex. We're going to cover both Globex and RTH here, so you can see the differences. The differences are massive, to be honest with you. Okay, so we get to this sort of breakout level, okay, which we've got the red arrow depicting here, and then at the right hand side, you know, you can see again the amount of buying that takes place. But just as you come up to this breakout level, there is not one person in the world that is looking to sell back into this price. Not one contract is sold back into this price, okay? Which is extremely important for you to know, because very typically a support and resistance level, you're going to expect more selling to come in, okay, and sellers to basically step up and defend that level, okay? You can see that the market then ultimately breaks out, okay? We have then a buy imbalance with no selling coming in, essentially to then take price up. Now we see for this whole candle there's 635 positive delta, there's only 4063 contracts. Of course this is Globex, so we ultimately end up reverting back into the mean, okay? But when you're looking at this candlestick chart, you have got no idea if any selling is actually happening or if it's true buying that's coming in, okay? And without knowing the size that's coming in, you're basically blind to it. The market could be coming up to this level and someone could aggressively be absorbing on the offer and stopping the buying from going through, okay? With the footprint chart, you get to see the amount of size that's coming in to give you a better shot to make an educated guess that this is going to break, okay? And this is an example of essentially taking a breakout. Or ultimately when price does get up higher, we've not got the example of this, but fading it then back into the mean, okay? Now, the regular trading hours example here, we know there's a sell-off and the sheer lack of buying and no defense on the bid, and the amount of negative delta that comes in as well. Okay, now I would note for this that this doesn't look a very big sell-off. It's because of the scaling with the how the chart is squashed. Okay, so this is a standard chart that you're seeing, the candlestick chart. We then see amount of selling come in, but then if we look at it on the right hand side in the footprint, okay, we see a sell imbalance come in, some aggressive selling starting to hit into the bid. Note the amount of negative delta the candle ends up with. But as you come down, when you're seeing this selling happening, as it breaks this low, okay, note the amount of selling that comes in and the amount of imbalances that are happening. And as price is going in at the right hand side, you're seeing not one person at this price even stepped up to buy a single contract, and the same again here. Now note as the market then comes back down here, notice how the volume starts to thicken up, which in essence is people then taking profit, they start defending the levels, and then essentially it gets bid back up. Okay, this is the end of Friday's session that you're looking at as well. That's just went past. Okay, and note the amount of contracts that were traded in here. So there's 17,465 contracts that were traded in total in this 5-minute time frame. Whereas when you look at Globex, you're looking at 4,000. So it's a massive difference in volume. Okay, in the regular trading hours, you're going to get more continuation and more follow through than you are in Globex. That's just the way it's going to happen. Okay, just simply because there's enough volume to start banging through prices and through levels. Okay. Now, when you can see this is an example here. In the middle of Globex session, we have a 5-minute candle that is showing 1,505 total contracts executed. And in the flip side, for the same 5-minute candle in the regular trading hours, we have 25,000 contracts. Okay, so there is a vast difference there. So this is why Globex, okay, or the extended trading hours, you get much more mean reversion that happens because there is no one trading. It's just algorithms fighting against each other. Okay, and this is where, when you take into account specific levels, you need to factor in the buying and selling that's actually coming into the market to give you a better chance. Okay, this is where the majority of people make most of their money in the regular trading hours, because there's just more volatility and ultimately more volume is traded. Okay, now putting all this together, the footprint is to be used in confluence with the depth of market, so you can see aggressive orders and passive participants. Okay, because the footprint only shows you the market orders that are coming in, and without knowing the limit orders there, you're essentially missing part of the information. So you need to know what the whole picture is in order to make the best educated guess for your edge, to allow you to take the most out of the market. Okay, and what I mean by that is there may be a large amount on the limit price that is in essence stopping the market from going through. If you don't see that, then you're going to be missing out. But if you're new to order flow, using the footprint is going to be far better than just no order flow tools at all, because going from a candlestick chart to depth of market is a massive jump. It takes you a lot of time to learn all of these different tools and to put everything into context. Okay, and when you get proficient at this, it doesn't matter if you're trading support and resistance, supply and demand, Wyckoff, ICT, none of it really matters, to be perfectly honest with you. But utilizing order flow will definitely increase your strike rate, and it will allow you to have a less max adverse excursion to keep you out of bad trades, because then you can actually get to see if you're selling at the moment and you're anticipating the market going down. Well, you need to see some sellers actually come into the market in favor of your position. If you don't, then you need to get out of the trade because you're wrong. Okay, you shouldn't be holding these trades for 40 50 points or whatever offside, or 20 30 ticks. Maybe it depends on the likes of NQ, but in the much thinner markets. But in general, if you're trading on ES, you're offside when that's the case. You've had a pretty bad entry. So when you're utilizing the order flow, footprint, depth of market, and putting it together, it allows you to get much more proficient entries. And also on the flip side, you can be using the order flow to help you get out of the trade as well, and it helps you keep in for the trades to hold for a higher R multiple. Okay, and in general, allows you to see in real time if sellers are still aggressively hitting into the bid, and are they still interested in continuing that level, or are they getting tired and exhausting? Okay. Now there's going to be some pressure points in this. This takes some time to learn. Now you're going to see two different variations. You're going to see sellers literally just do not want to step up and continue hitting. When that happens, buyers will normally just lift it up back into value. Or you see sellers that are aggressively hitting into the bid, but the limit is absorbing all of that selling. And when that's the case, the snapback happens quite quickly back into value, because those sellers that sold aggressively need to then become buyers to get out and cover their positions, and then you essentially have a quick ride back into the next inflection point. Okay, so extremely important to factor all this in, because you need to determine whereabouts for the order flow is coming in, where is pressure points, where are these people going to be put under pressure for their actual orders that they're now in, and ultimately you need to look to try and take price there or to go with them, okay, depending on what flow is coming in. So I hope this has been helpful for everyone, and this is a quick insight into what actually order flow is for the footprint. And hopefully, as you guys get used to this and you work your way through the series, you'll get much more proficient in how you're executing. But if you've got any questions, feel free to leave a comment below. And as always, if you do the YouTube shit for me, hit the like and subscribe button. That would be much appreciated. So until the next video, hope you guys keep well. Peace.